Anybody else got bank accounts like I have? Not vast amounts, but I have to keep a bit by to pay me tax bill because I'm rated as self-employed. So I always have to have a few grand sitting around, and I try and think, well, where can I put that money then? Because trying to make it work for me, I've got bank accounts where I'm getting 0.00001% interest. That's a joke, isn't it? That may reflect my imprudent financial planning, but it's ridiculous. John in Stourbridge says, if they're increasing the mortgage rate, as the Halifax, etc. are doing, in an effort to encourage savings, as your previous contributor said, with this mortgage increased, the cost of living going up daily and wages frozen, please explain to me in single-syllable words where exactly the money is coming from to save. I think that's a very fair point, John in Stourbridge. Are the banks ripping us off? Let's speak to Jonathan Davis. He's an economist and wealth manager. Hello, Jonathan.
Hi, good morning, Adrian.
Are the banks ripping us off?
Whenever I hear people saying that the banks aren't helping us, I do always chuckle. The banks aren't there to help us. The banks are there to make money. The banks are there to pay vast bonuses. Yes, the banks are ripping us off. That's their job.
Well, you say it's their job. I mean, listen, Jonathan, all joshing aside, the banks are there, one understands, to make a profit for their shareholders and to keep people in employment. And most reasonable people would have no difficulty with that. Profit makes the business world go round. I suppose the question is whether those profits are disproportionate. And when people hear that the Bank of England base rate is 0.5%, yet if they're a Halifax or a Bank of Ireland customer, their mortgage rates are going to go up dramatically. If they're a standard variable rate customer, up towards 4% and beyond. It's that gap, I think, that people don't understand. That's where people feel it's unfair.
Of course it's unfair. And you know what you'll hear is that the banks are doing it because the cost of wholesale funding on the money markets is rising. Well, it might be rising, it's true, but it's a tiny percentage of the increase that the banks are raising the costs of their mortgage holders. On a separate thing, or similar, but what do you think the money printing by the Bank of England is? Tens of billions of pounds a year we're handing to the banks.
This is the quantitative easing process, which is designed to make it easier for the banks to get over the credit crunch.
Well, they created the credit crunch themselves. They are bankrupt. So why are we subsidizing the banks, both in higher inflation, although clearly it's falling at the moment, but it's higher than it was, and it's going higher because of quantitative easing. We're subsidizing the banks. We're paying for it by higher inflation, higher taxes, higher mortgage rates, low savings rates. Why are we subsidizing this monolithic behemoth of an industry when it's actually costing us the earth to do so? Let the insolvent banks go bankrupt, and then I tell you the cost of banking would fall and our cost of living would fall. That is one of the solutions to the root problems in our economy.
But Jonathan, Peter Hunt, who's a financial advisor who spoke to us earlier, said that although we look at the 0.5% bank rate, the banks do actually borrow from a number of sources. And although it seems like a big gap between 0.5% and almost 4% that people might be paying on their mortgage by way of interest rate, actually sometimes the banks do have to pay more for the money that they use than the 0.5% of the Bank of England base rate. So yes, there isn't such a big gap, is there?
No, there is. It's not as big as the Bank of England rate. It's true. They borrow on the wholesale markets in order to lend to house buyers, but they're not borrowing at 3.5% and then lending at 4%. They're borrowing at 1.5% and then lending at 4%. They're making a massive margin, and the reason why they're raising rates is not really because those wholesale rates are rising, because they're rising just a tad. The reason why they're raising mortgage rates is because they're bankrupt. and they're doing everything they possibly can to get money from wherever. And
well, isn't that responsible of them then? I mean, if they're trying to avoid going bankrupt, then getting a product at one price and charging a hefty premium on it at the other end, that's one good way of ensuring they don't go bankrupt, isn't it?
Well, if it were as simple as that, you'd be right. But the reality is they have vast amounts of bad loans on their books, hundreds of billions of pounds of loans to Greece, to Portugal, to Spain, indeed to businesses and home buyers in the UK who haven't got a hope in heck of repaying that mortgage because the business has gone bust or because the people have been made unemployed, unfortunately. And yet those banks are allowed to hold those loans in their balance sheet at 100 pence in the pound. Any other business, whether it's sandwich making or producing oil, if you have got a loss somewhere, you have to show that as a loss on your books. Banks, for some obscure reason, are allowed to hold them still as profits. They are insolvent now. They're being allowed to fudge the figures. Let them go bankrupt. Stop subsidising them to the tune of £100 billion a year. That is equivalent, Adrian, to 200 full NHS trust hospitals a year.
Jonathan?
And that's how much we are giving them, not counting these large increases in mortgage rates just in order to keep these banks going. Well, I'm telling you, it's not helping.
Jonathan Davis, economist and wealth manager. I think it's fair to say that Jonathan does think the banks are ripping us off.